In an interview with the Birmingham paper, he said, in Washington, the view is that the banks are to be regulated, and my view is that Washington and the regulators are there to serve the banks. He later clarified that to say that he was worried about micromanaging. But what do you think of a comment like that?
Well, I didn't hear the full comment. I think I overheard him talking to somebody, and he said that he was completely taken out of context. I don't think any politician would stick his neck out and say, well, I'm here to take care of the banks, especially under these circumstances, because I don't know the details of that, because he was a strong supporter, one of the early supporters for auditing the Fed. And, if he explained himself, I bet we'd come to a pretty close agreement, because I think one of our problems has been over-regulations, not under-regulations. I want the markets to regulate. I want the bankruptcies to occur, and you regulate in the marketplace a lot differently, but to allow the Fed to create the problems and then say, oh, well, the Congress can compensate by regulations. But the housing bubble came from too much credit, but it came up with all the mandates from the Congress saying you must make some of these loans. So those kind of regulations are very bad when you're telling under these circumstances that banks have to make certain loans that are risky.
So you think regulators really should be pulling back more than they have?
I don't think we need regulators. We need law and order. We need people to fulfill their contracts. We need the government to fulfill their contracts that have honest money, so that you don't have to anticipate the devaluation of your currency. We need honest interest rates. But the market is a great regulator, and we've lost understanding and confidence that the market is probably a much stricter regulator than the special interest regulators who's, we regulate. But guess who got regulated to their advantage? It's been the big companies. So no, the regulators get, the big companies get control of the regulators. So the marketplace, it doesn't happen that way. The government's role then is to say, you fulfill your promises. If you said you're going to do something, if you're going bankrupt, you declare bankruptcy and nobody's going to bail you out. There will not be any moral hazard, because when you regulate and guarantee the lender of last resort, it creates a moral hazard and causes the banks to make a lot of mistakes.
Congressman, we're just about out of time. You've had the opportunity to see many men at the helm of the Fed. I'm wondering how you think the current chairman is doing in executing his responsibilities.
The current what?
Chairman, Ben Bernanke.
Oh. I get asked that a lot, and I think people look for me to be, very, very critical. I'm very, very critical of the policy. I think it's a lousy policy, but it's a system that I'm most critical about. And I was critical of Greenspan the same way, because they adhere to a philosophy that I consider totally incorrect. So there I'm very, very strong. But whether he was a worse manager than Greenspan or compare, or if you fire Greenspan and put another person in that has a philosophy of that blends in with Keynesianism and inflationism and fiat money, that won't make a difference. You have to analyze the whole philosophy of the monetary system, and you have to reject this system that is literally counterfeit and artificial and inflationary. This is the problem, rather than Bernanke himself.
We have 30 seconds for a final question. Either of you?
Go ahead,
If
I'm okay.
If not, we'll let that go as our final with you, Mr. Paul. Thank you, Dr. Paul, very much for being with us on this busy week in Washington, D.C.
Thank you very much for having me.
Let me turn to Sudeep Reddy and Robin Harding just to learn a little bit more about the larger politics involved with this appointment. I found a quote in one article from Barney Frank, the outgoing Financial Services chair, who said, Ron Paul's vision of the Fed doesn't represent the view of most Republicans. So I want to ask you the question I was intending with him, which is, what's the intent of the leadership in acceding to his chairmanship of this subcommittee?
Well, Chairman Frank is right that Ron Paul's views do not sync with most other Republicans, most other lawmakers, and really most other Americans. But he's building what he considers a movement to end the Fed. And that's important for a couple of reasons. One, because the Fed hasn't really been criticized very much over its recent history. It certainly was into the early 80s. But it's kind of been seen as an untouchable force since the financial crisis. That's changed a lot. And Ron Paul has been around for a long time, and so he's using his decades of seniority, and he finally gets a chance to, I guess, become a thorn in the side of the Fed a little bit more. So that's important given both of those currents going on. Whether it actually leads to something and any real changes in the Fed are obviously what we'll be watching.
We've obviously been focusing on the House side, but in the Dodd-Frank debate, he was joined in this challenge to the Fed by Bernie Sanders, and probably an example of politics makes strange bedfellows. Now the new Senate will have a number of Tea Party senators. What do you expect will happen with the politics of the debate over the Fed with this new Senate?
Well, I expect there'll be a great deal of criticism of the Fed, anger about the Fed, but I think one thing you have to remember is that the reason independent central banks were created was partly to give politicians something to complain about the economy, rather than actually meddling with it themselves. And the barriers to making substantial changes to how the Fed actually operates are extremely high. All the governors of the Fed are appointed on long terms, they're quite independent, and the legal framework gives the Fed a great deal of latitude. So unless the whole Congress wants to actually change the law, it's hard to see how there's going to be much more than noise and criticism coming from either house of Congress.
He said his immediate goal is greater transparency. What is he likely to make gains in that area?
He actually deserves a lot of the credit that for what he's been pushing over the last 2 years. He was an early the creator of this Audit the Fed movement, and as a result, there was a version of that, not what he wanted, but a version of that ended up in the Dodd-Frank bill that at least brought out the transparency to the $3 trillion in financial crisis loans. And so that was Ron Paul and Bernie Sanders in the Senate, and it got a lot of traction. And so in transparency, he actually has some bit of a success story. I'm doubtful that he's actually going to get to the point where he wants, where we'll be able to go and see either in real time or to have congressional auditors go in and really take apart the policy decisions of the Fed. And even a lot of the critics of the Fed say that's really not important here. What you should be doing is looking at the end results of the Fed and deciding on your own at that point whether the Fed is meeting its goals and its mandate. And there's certainly a lot you can say about that with both inflation and unemployment.
It was interesting that he was not very keen on Humphrey Hawkins reform, which, if you listen to a number of Senate hearings of late, that legislation, which did give the twin authority to the Fed, or twin mandate to the Fed, has become a subject of great discussion of late. Is his sentiment, did it surprise you that he was not so keen on the end results of that?
It doesn't surprise me that much. I think what you have to understand is that Ron Paul's worldview is very, very different from the current framework, and the proposal to change the Fed's mandate to just target inflation rather than to target inflation and employment is actually quite a minor tweak within the existing framework, so it wouldn't really meet the criteria that Ron Paul is looking for. But the other thing you have to bear in mind is the Fed probably wouldn't mind this change to just target inflation, because it sees balancing inflation and unemployment on the other side as very much two sides of the same thing. So it won't necessarily be a problem for the Fed or be opposed by the Fed if Congress does want to move towards just targeting inflation.
We have just 1 minute left. I guess to use that to look at the larger Financial Services Committee with the leadership of Mr. Backus, as you referred. What are the major things that he's indicating to come out of that committee?
Well, this is really an opportunity to go back to the debate about how much regulation we should have of the economy, of the financial system. You can debate whether there is too much or too little coming into the financial crisis. Most people think there was actually too little when you look at public opinion polls. And so this will be a test of it, of whether it makes sense to pull back. And Ron Paul is very much a libertarian in his thinking and believes we should pull back a lot of that regulation, and this will be the test to see if there's traction beyond a small group of lawmakers for this.
Mr. Harding, anything to add on what your sources tell you about that committee and what it'll do?
No, I'm afraid not. I follow the Fed more than the Financial Services.
We are just about out of time, so we'll use that as a thank you on this very busy week for Congress as they're struggling to get to closure, and the Democratic-controlled House, for being here to look ahead to the new Congress, specifically in the area of financial services. Thank you.
Thank you
very much.